Specific to this conversation about some speculation and the retail traders, Hertz. I can't say that I've ever seen a bankrupt company in a position to potentially sell stock as Hertz is, approved by a judge, approved by its creditors. Still, you wonder, aren't these investors being potentially taken advantage of by buying a security that could well end up being worthless? What's the view from the SEC?
Well, very good question. I'm glad you asked. For a company, any company, to sell stock in our public markets, there are a number of requirements, including disclosure. And there's liability for disclosure that is inadequate or incomplete in a material way. There also are process requirements, including for us at the SEC. And what I can say is that in this particular situation, we have let the company know that we have comments on their disclosure. In most cases, when you let a company know that the SEC has comments on their disclosure, they do not go forward until those comments are resolved. There are other processes here that companies have to follow, including if the shares are going to be listed, meeting continuing listing requirements for those new shares. And there are professionals involved. And look, we at the SEC, we're trying to carry out our responsibility in situations like this as best we can. And I expect the other professionals around this situation to carry out their responsibilities as best they can.
Interesting. So, you seem to be saying you obviously presented these questions to Hertz and to their lawyers and to those who were thinking about underwriting and or making this stock accessible to the public. Do you think then that Hertz perhaps is going to pull back from moving down this road, Chair?
Look, that's a decision for them to make. But we are following the process. It's a well understood process. They are aware that we have comments on their disclosure, and we will see.